On July 2, 2024, the first Solana ETF launched in the US, marking a historic moment for both the crypto and traditional finance worlds. And it's not just any ETF, it's a staking ETF, meaning investors can earn passive income from staking rewards, all through a regulated product. For the first time ever, institutional investors can buy Solana through their regular brokerage accounts and earn staking rewards, all in one move. No need for complicated crypto wallets or technical know-how. This is a game changer for crypto adoption, opening the door for a new wave of mainstream participation. For years, big money avoided crypto due to complexity, regulatory uncertainty, and the risks of self-custody. Now, that barrier is gone. The ETF structure removes the technical hurdles and regulatory headaches that kept institutions on the sidelines. The ETF, from Rex shares and Osprey funds, offers a regulated, insured, and simple way for Wall Street to access Solana, backed by trusted names in finance. It's the bridge between traditional finance and the decentralized future, connecting two worlds that were once separated by technology and regulation. Before, institutions had to deal with wallets, private keys, validators, and the constant fear of hacks or mistakes. Now it's as easy as buying a stock or ETF. Investors can simply log into their brokerage, search for the Solana ETF, and invest with a click. All the back-end work, staking, security, and compliance is handled by the fund managers, so investors don't have to worry about the technical side. This simplicity could unlock a flood of institutional capital that's been waiting for an easy entry point into crypto, potentially transforming the market. The SEC's approval signals legitimacy for Solana across the financial industry, giving confidence to investors who were previously skeptical. Solana is now seen as a serious asset with real-world utility, not just a speculative token. With more Solana ETF applications pending, this is just the beginning of a much larger trend. We saw what happened with Bitcoin ETFs, billions poured in, and mainstream adoption accelerated. Now it's Solana's turn to shine. This could be the start of a whole new chapter for Solana and its ecosystem as it steps onto the global financial stage. So how does this ETF actually work? Let's break it down step by step so you can see exactly what's happening behind the scenes. An ETF, or exchange-traded fund, is essentially a basket of assets you can buy and sell on a stock exchange, just like a regular stock. It's designed to make investing in a group of assets simple and accessible for everyone. In this case, the ETF holds Solana's $SOL token, which is the native cryptocurrency of the Solana blockchain. Instead of buying $SOL directly, you're buying shares in the ETF that represent ownership of real $SOL. Institutional investors and even everyday investors can buy shares of the ETF, let's call it $SOLA, through their regular brokers, just like they would with any stock or traditional ETF. There's no need to set up a crypto wallet or use a crypto exchange. The price of $SOLA is designed to closely track the price of $SOL, so traditional investors can get exposure to Solana's performance in a familiar way. But here's where things get interesting. The real innovation is staking. The ETF managers actually buy $SOL with the money investors put in, and then stake those tokens directly on the Solana network. Staking is a process that helps secure the blockchain and keeps it running smoothly. By staking, the ETF earns rewards, typically around 7 to 8% per year. These rewards aren't just kept by the fund, they're passed on to ETF investors, giving you a source of passive income on top of any price gains. That means investors benefit from both the potential price appreciation of Solana and the steady stream of staking rewards, all without having to manage crypto themselves. This yield is far higher than what you'd get from most traditional assets like bonds or savings accounts, making the ETF especially attractive for those seeking higher returns. For Solana, every dollar invested in the ETF means real $SOL is being bought and staked, which increases demand for the token and reduces the available supply in the market. This isn't just paper trading or synthetic exposure, it's real money being used to buy real assets with tangible effects on the Solana ecosystem. The ETF creates steady buying pressure and price stability for Solana, which can help support the network's long-term growth and adoption. And all of this is made possible thanks to a simple, regulated wrapper that brings the world of crypto to traditional finance in a safe, accessible way. Let's look at the numbers. Bitcoin ETFs have seen over $2 billion in inflows in a single week. Ethereum ETFs nearly $300 million. If Solana's ETF attracts even a fraction, say $500 million a week for 5 months, that's $10 billion flowing into $SOL. That would boost Solana's market cap by over 12%. And this isn't a one-off. ETFs create a continuous pipeline for new capital. As more investors and ETFs join, inflows could grow even larger. This sustained buying pressure could fundamentally re-rate Solana's value. ETF investors are typically long-term holders, not day traders. The staking yield gives them even more reason to hold. This creates a stable foundation for Solana's price. Constant buy pressure and reduced supply is a recipe for significant sustained price increases. The impact could be seismic. A higher $SOL price isn't just good for investors, it transforms the entire network. The security of Solana's proof-of-stake system rises as the value of staked tokens increases, making attacks more costly. Rising prices attract developers and entrepreneurs, fueling a wave of new projects and innovation. This creates a self-reinforcing cycle. More value, more talent, more growth. Everyone holding $SOL, foundations, VCs, developers, becomes wealthier, and that wealth gets reinvested. Grants, investments, and hiring all accelerate, boosting the ecosystem. Higher $SOL also means more borrowing power in DeFi. Users can borrow more against their $SOL, unlocking liquidity without selling. This makes Solana's DeFi ecosystem more dynamic and capital efficient. A rising $SOL price is the engine for growth, security, and innovation. The effects ripple across the entire network. When institutional money lifts SOL, the whole Solana ecosystem benefits. Memecoins, love them or hate them, get a boost as new wealth trickles into speculative assets. A rising SOL price often sparks a new Memecoin season, drawing in more users and liquidity. Decentralized exchanges see more trading, and DeFi protocols get a surge in activity. Liquid staking becomes more popular as users seek to maximize yield and utility. Users can stake SOL, earn yield, and use liquid staking tokens as collateral, all at once. Lending, borrowing, and trading platforms see record activity. Demand for stablecoins rises, creating new opportunities. The ETF's liquidity supercharges DeFi, making the ecosystem more productive and profitable. Institutional capital provides the base. DeFi puts it to work. The Solana ETF is just one sign of TradFi and DeFi merging. Projects like XStocksFi are building bridges by bringing real-world assets like NYSE stocks onto the blockchain. Imagine trading tokenized Apple or Tesla shares on a Solana DEX 24/7 with instant settlement. XStocksFi creates synthetic, blockchain-backed versions of stocks, letting DeFi users access traditional markets. This also shows TradFi investors the speed and efficiency of DeFi. The ETF makes institutions comfortable with Solana, encouraging them to explore on-chain products. Funds could soon create hybrid products, $SOL plus tokenized stocks, all managed by smart contracts. This hybrid system is more open, efficient, and accessible than anything before. It's not DeFi replacing TradFi, it's the two merging into something stronger. There's a macro wildcard US government policy. A proposed $5 trillion debt ceiling hike could mean more money printing and inflation. When cash loses value, investors seek hard assets, gold, real estate, and now, digital assets like Solana. Trillions in new liquidity will flow somewhere, and with the ETF, Solana is ready to capture its share. Fiscal policy could unintentionally fuel the next crypto bull run. The micro-catalyst of the ETF and the macro-catalyst of money printing could combine for explosive results. Demand for Solana is being unlocked just as capital supply surges. It's a perfect storm for price action. The ETF is just one part of a much bigger picture. What does all this mean for you, the retail investor? Let's break it down in practical terms, so you can make the most of this new chapter in crypto investing. First, validation. A US-approved staking ETF signals Solana's legitimacy and long-term potential. This isn't just hype. It's a sign that major players and regulators are taking Solana seriously. If you've been on the fence, this is a confidence boost. It's a green light for those who are waiting for more credibility before jumping in. Expect volatility. Big inflows mean big price swings, especially early on. The market will react quickly, and prices could move dramatically in both directions. Don't get shaken out by short-term moves. Focus on the long-term story of institutional adoption. Remember, the real value comes from staying patient and not letting emotions drive your decisions. Explore the broader Solana ecosystem, DeFi, NFTs, Memecoins, where new opportunities will emerge. There's more to Solana than just the token. Its ecosystem is growing fast. Projects with real utility and strong communities will benefit most. Look for teams that are building for the long haul, not just chasing quick profits. Research top DEX, lending platforms, and staking protocols. The more you understand, the better positioned you'll be to spot the next big thing. As Solana's value grows, so will the value of its applications. Early adopters of these platforms could see outsized rewards as the network expands. Invest wisely, never more than you can afford to lose. Set clear limits and stick to your plan, no matter how tempting the market gets. The ETF is bullish, but crypto is still risky. Regulation helps, but it doesn't eliminate the ups and downs or the possibility of loss. Be smart, patient, and strategic. Use tools like alerts and research to stay ahead, and don't rush into decisions. The rules of sound investing still apply, even as the stakes rise. Stay informed, stay disciplined, and you'll be ready to navigate this exciting new era. The Solana Staking ETF is a milestone, not the finish line. More ETF applications are pending, and success will likely bring more approvals, competition, and innovation. This could turn a trickle of institutional capital into a steady river. The ETF's success will pressure other crypto assets, especially Ethereum, to add staking features. This event proves there's room for multiple top blockchains, not just Bitcoin or Ethereum. It encourages investment and development across the crypto space. Each new ETF and DeFi TradFi bridge brings digital assets closer to mainstream adoption. For Solana, it means a more secure network, a richer ecosystem, and a broader investor base. For everyone else, it's a front-row seat to a new financial paradigm. The journey is just beginning. The most exciting chapters are still ahead.